What did we learn from Janet Yellen? That she's ready to go despite not having much of an idea of what Trump's economic plan is.
She's obviously expressed concern about market expectations for March and rate hikes from the Fed in general in 2017 falling too low. I think that's probably one of the main things that Yellen was trying to get out in front of yesterday. Our view is that the odds of March did indeed slip too low, and we believe that they should be closer to 50-50 rather than, 80-20 or something like that. The bottom line is that when faced with the uncertainty of Trump, they are still faced potentially with a sea change in fiscal policy that they don't want to be falling behind the curve of. Two of the things that have happened since the crisis is that capital investment in the U.S. has been very weak, and so has productivity growth. And those things could change materially as a result of fiscal policy. So the delta is potentially huge because of that sea change.
But how, actually, on productivity, I mean, change for the better, right? And how does fiscal policy automatically impact productivity?
Fiscal policy and changes to the tax code, and even more importantly, the potential for reshoring of U.S. production as a result of Trump's trade policies could vastly affect companies' willingness to invest, and they could also affect capacity utilization in the states. Both of those things would be positive for Fed policy. In other words, upward trajectory for rates.
Yeah, so Manish, do you actually assume that the trend is going to be better from now unless we get a full-on trade war with China?
Yes, I think that if I look at economic growth, I am definitely feeling more positive. However, I have to say that I don't expect that rates are going to increase in March, because one of the favorite measures that Fed looks at is core PCE number. If you look at the core PCE number, apart from December 2011 to April 2012, you haven't really seen that hitting 2%. So consistently, Fed, in its own measure that it expects to do at 2%, it has been undershooting it. So my view is that, a lot of the change that President Trump has promised is not going to come until second half of the year or latter part of second half of the year. So I do not see any concerns in terms of Fed going ahead and raising rates, and it is also continuing to maintain its reinvestment policy, which it has said it is not going to tamper with. So to me, it's like market will rally up, as we have seen consistently over last year. Market always talks about it, but doesn't happen.
I just wonder, and of course we also go back to animal spirits. I just wonder how much of it is already priced in, Stephen, into the dollar.
There are about 2 rate hikes priced in. I would say maybe 2 and a bit, but I would also highlight that after the second or third rate hike of the cycle, the Fed's tightening, the Fed's raising of rates doesn't really matter for the dollar anymore. But again, I draw your attention back to the potential sea change on the fiscal side. Economists from all over the world have been calling for a change, a move from the central bank narrative and balance sheet expansion to different drivers of growth. Now that we have the
fund it, right? So you need to fund it. You need to fund infrastructure, and that's impacted by the dollar strength.
Right, and that's where changes to the corporate tax code come in. Tweaks to for the better way approach. Potentially a capital flows tax with a border adjustment. That's where the funding question comes in.
So the problem with the tax, right? How does he conciliate the kind of working for the average man, the kind of the man and women that felt they were left behind by globalization, which seemingly giving more to companies and people who already have quite a lot?
Sure. So I think the key thing about the tax reform is that how does that impact SMEs? It's not as much about the large corporates, because remember, the U.S. corporate tax rate is highest in G20. But if you look at the SMEs, they are the ones who are carrying the burden. The large corporate, they pay effective rate of 15%. So if a tax reform...
Wall Street are not doing bad on the back of this.
Yeah, I mean clearly. And it's not about as much about large corporations and multinationals. It's about SMEs in how they have complained about over-regulation, high taxation from EPA, from healthcare issues and all. If you don't solve that part, you're not going to get the animal spirit, and Trump will not get his 4% growth rate. So to me, that's what I'm looking for when they do the tax reform. How does that affect SMEs and small businesses, which is the bulwark of the American economy?